Alright guys, I know that Palantir has been in a complete free fall since hitting those all-time highs of over $125. And yes, I know some of you guys weren't happy with my price target for Palantir either in my last Palantir video, but that doesn't mean I don't think it's a great company. But is it the all-time greatest stock ever? Well guys, as you know, we bring you guys the truth without the hype right here on this channel, so we're going to discuss that today. We'll discuss valuation, and of course, Wall Street has an opinion on that as well. We kind of need to parse through, is there some truth in that? Is it complete and total hype? Is this guy out of his mind? I mean, a lot of different takes in regards to all this sort of stuff, so that's exactly what we're going to talk about today. Just make sure you like the video if you like getting the truth without the hype. All right, so you guys know I have been all over Palantir now for close to 4 years. Actually, it was on my radar whenever it actually went public because of a friend. I actually had a friend just tip me off, works in the Department of Defense, just said, hey, this company's getting ready to go public. You need to take a look at it. But of course, like everything else in my life, valuation is what matters. And I wasn't buying it, at those astronomical $40+ highs back in 2021. I knew we would get cheaper opportunities. Now, I didn't know we'd get $6 opportunities, but I knew we would get much cheaper opportunities than that $40, and I didn't need to buy the hype and everybody's DCF model that told them it was cheap and all that other garbage like that. Didn't need to do any of that sort of stuff. Waited. Of course, we've been loading the boat this entire time, which of course, on the other side, some people absolutely were blasting me for, buying cheaper shares instead of buying more expensive shares. I don't know. I don't understand the logic out there sometimes. But Palantir has transitioned from a high hype, level stock to a, wow, this really is a special company. Now, we've all known that, right? We've known that for years. It's a special company, but Wall Street is finally coming around to that as well. But is it an all-time great stock? Is it one of the greatest stocks of all time? Well, I think we can definitely have a debate about that. So let's see exactly what they're saying. And if you're serious about building real wealth, learning how to invest in stocks, learning how to buy Palantir in the $7 range or even $20 last year and not buying hype runs at 120, 125, because it's going to 300 this year or whatever some of the other narratives were then, you're serious about not getting caught in those traps over and over and over again, and you want to work directly with me to get that, make sure you check out the pinned comment. The March Madness sale is live. We'll talk more about it at the end of this video, but we need to jump into this video here specifically and see exactly what Wall Street's saying and get you guys the truth from the hype.
Michael, what kind of names are you going to be looking for, or when do you buy in? Because you said fundamentally things are still looking pretty good, right?
Yeah, so I saw a great line this morning. Walmart is trading at 35 times forward earnings. NVIDIA is trading at 23 times. So you tell me, what has better growth prospects? What's going to generate a higher free cash flow yield?
Yep, great line right there, right off the start. That is, honestly, it's mind-blowing, given the amount of growth that NVIDIA not only has had, but has in the future. And the fact that Walmart is trading significantly more expensive from a valuation standpoint tells you all you need to know about what's going on in the market right now. And we have a very strange, mismatched, mispriced market in general. This is one of the reasons why, you got to think about 2 years ago, people were freaking out because Buffett started selling. And then obviously last year he sold more. And then, this year it looks like he started off selling even more, right? Obviously the bulk of it was last year. This is one of the reasons why Warren Buffett's not buying stocks like NVIDIA. He's buying stocks like Walmart. And Walmart is trading ridiculously expensive compared to its historical and obviously compared to tech names, high growth tech names, best of the best companies like NVIDIA. So of course, when you think about Buffett overall, is he predicting a market crash? No, he tells you over and over again, he doesn't invest that way. He doesn't even think that way. It doesn't even cross into his, matrix per se of decision making. But is he looking out there and the style of stocks that he's looking at and the type of stocks that he would buy that are kind of in his circle of competence that fit his goals, his plan, everything else with his fund? Are those all significantly overvalued and probably due for some sort of a correction? I don't know. That stat right there tells me exactly that. The fact that Walmart is trading significantly more expensive than NVIDIA is honestly mind-blowing if you really think about it. That doesn't make any sense. But oddly, it's kind of been that way for a while now. So when you hear these sorts of narratives or you read these articles or somebody makes a YouTube video about that sort of stuff, that's why you got to dig a little bit deeper. You got to understand exactly what Warren Buffett buys, exactly what restrictions are on Warren Buffett buying versus you and I as retail investors. And that's why in the end, valuation is so important. Even during the 2022 crash that we just had, right? There was plenty of stocks that were crazy undervalued. Your Metas, Googles, Amazons, obviously Palantir, we're talking about them right now. But there were other stocks like McDonald's that were ridiculously expensive. And I'm sure Walmart fit in that category and a few others. I can't remember all of them now. But the point being, even during crashes, some stocks crash and crater on incredible deals that you make, 3x on, 5x on, 10x on in a very short period of time because they crash so low. And then there's other stocks, if you bought them during that crash period, you haven't gone anywhere the past 2 years. That, unfortunately, is kind of the situation that Buffett's been in because the type stocks he likes to buy have kind of fit that category. They weren't the best buys back in 2022. They weren't the most incredible buys last year and this year, obviously, so far. So that right there is something you have to understand as an investor. And when you're looking at it, this is why I preach valuation so freaking much. I don't care what the market crash is doing. I don't care what the indexes are doing. I don't care what the narrative is. I don't care what anything else is going on. I care about valuation because there are deals in every single market. Red hot markets, there are steal deals out there. Oh, we'll talk about Buffett's favorite, right? 2021, man, every single stock to the moon, but yet there was Apple at $115 or so. Not a bad buy for, over the past 3 years in regards to Apple. It's not like that was a diamond in the rough or anything like that. It's freaking Apple, but nobody wanted it at the time. And vice versa. You saw it last, obviously in 2022, saw it last year. We'll probably see it again this year. There are always opportunities in the market. That's why I don't care. That's why I base everything on valuation and why it's so important, why you got to learn it. Don't care. Don't join my group. Totally understand. Learn it, Google it, whatever the case is, you got to know it.
Over the next 2 or 3 years. And so all these names that have been beaten up, I think are absolutely worth a look. I'm fortunate enough to have bought and really started coming hard into the space towards the end of 2023. So for a lot of these names, like I'm playing with house money for my clients, and I'm pretty close to fully invested. My all-time favorite stock that I've ever seen is Palantir. Palantir.
Yep, there it is right there. It's his all-time favorite stock there. And the guy has like a giant neck or something. I don't know what the deal is. I wish my traps would get that big. It looks like a wrestler or something with those big old traps. Anyways, that has nothing to do with this. But there it was right there. His all-time favorite is Palantir. He jumped into this space in 2023, excuse me. Yeah, really good timing there. Obviously has played this particular play correct so far, but keep in mind he is a hedge fund, which means at some point in time he may be looking to take some profits, do some other things like that, which nothing wrong with that. Again, it's a different game altogether than what we're doing here. We're looking for a great entry point into great stocks. And unfortunately, in my opinion, and we'll talk about this more at the end, Palantir still isn't there yet. But let's see what he has to say about it.
I traded up to $125 and had a massive gap up from 83 to 103. We got to close below 103. We backfilled that gap. We closed yesterday below 83. If we get another close there, I'm looking below 83. I'm looking to add to that stock in the 60s because I think we kind of go back to the pre-last earnings run-up and start moving in there. But the prospects for this company over the next 3 to 5 years are like,
there you go right there. He's looking to add, in the 60s or so. Is that possible? Yeah. I mean, again, he's pulling up all the little charts and graphs and doing all those little pretty lines and all that sort of stuff. I'll give him credit for being disciplined to not just, go after that first line or the second line, that draws, the levels of support there for Palantir and kind of being a little bit more patient. But I'm not sure he's basing that on valuation. I think he's basing it more on the trade, the momentum, and where those possible, support lines are and everything else. There's nothing wrong with that. But what you're seeing there is you're seeing Wall Streeters kind of giving you where they want to start buying the stock again. Not, the ridiculous price targets and all the other stuff like that we see. This is kind of the first time where you kind of see a guy kind of say, hey, I'm looking to add here at this particular level. Instead of the way a lot of other folks do it, which is just kind of, oh, you could add here, but then you could do this and you could whatever. All that other good stuff like that kind of drives a lot of us nuts and gets a lot of us as retail in trouble because we try to copy it and we don't understand really what the heck they're doing, or they're actually doing something else in the background opposite of that. And they basically said that to set you up. That sort of stuff happens too. But interesting to see that right there is where his price target is. And I'd be interested to see where that falls in regards to, is that strictly based on technicals? Or is that based upon valuation and kind of what is more of the Wall Streeters who are long and believe in this company long term? Where are they at as well? Not the ridiculous guys that put out these ridiculous price targets. I'm talking about people who are looking to be active buyers right now, not trying to build a social media following and be on TV all the time. Where do they have the stock at?
Nothing I've ever seen. Morgan Stanley thinks AI software spend this year is roughly $60 billion, and that goes to $400 billion in 2028. Palantir's got a 7 to 9% market share of that now. If you extrapolate that out to 2028, that's a $20 to $30 billion revenue number which is a 4 to 5x from where they're going to end up from this year. And the way of the operating leverage from their business with the way they use their engineers, the fact.
Now, keep in mind, just because you increase revenues 4 to 5x does not mean the stock price increases 4 to 5x. That's a very, very key thing that a lot of retail investors get wrong, is they immediately think, oh, well, they grow revenues by this, that means the stock price is going to go up by that. Completely not true. Earnings and revenue sometimes don't always align, and especially when we're talking about valuation, right? Earnings is what matters, not revenue. Now, revenue growth can mean I'm willing to pay a higher multiple. I agree there, but that does not directly translate into, oh yeah, that means the stock price or the valuation of the stock goes up, in direct correlation with that revenue number. It's just not how it works. Of course, that can work for you or against you, depending upon how efficient and everything else the company is. But nonetheless, don't make that mistake in your head whenever you're thinking forward. More importantly, he's talking about 2028. We're in 2025 now. So realistically, you could maybe project out 2027 at best. In regards to that, more importantly, I'm more inclined to go off of what management says, not based upon a Morgan Stanley projection that may or may not actually come true or translate or anything else of that nature. And those projections change all the time too. So it's not really a very accurate number to do or to gauge where a stock could go in the future. Stick with those solid fundamentals. Worry about buying at fair value or below fair value. And it seems like those future price projections just take care of themselves. Sometimes not as good as you thought they were going to be. Sometimes they blow you out of the water. But either way, I don't base my current day decisions upon a future that I can't see and is, basically a guess at that stage. That's how you end up losing in investing in the end. You end up buying hype and hope instead of actual fundamentals.
Been working on this technology for 20 years. It's going to be a cash machine, a profit machine, and as a SaaS company that's going to continue to grow at unimaginable rates, is always going to have an astronomical multiple. So I'd be looking to add this based on tonight's close in the low 70s, high 60s.
Yeah.
That's where my clients that didn't get in, or clients that maybe wanted to sell somewhere up in the 120s or missed this move, I'm going to be adding it there because I've never seen a technology company ready to disrupt the world the way that Palantir is.
All right. So in regards to his statement there about, I've never seen a company grow like Palantir and it's going to have an astronomical multiple moving forward. It's going to have a high multiple, not 400, not 500. That's just not even realistic. And oh, by the way, Palantir's growth rate isn't all that quote unquote incredible. It is great. Do not get me wrong. Do not take this as me being bearish. I know some of you guys will go down there and say, oh, he's a bear. He's a bear. No, you can find lots of companies that are growing a lot faster than Palantir is. Now, do I think their product is as sticky? Do I think that it is, we've always talked about, to me, Palantir is going to be that slow growth beast. It's just going to add contract after contract and just the concept of stacking and all those other things like that kind of come into play, create this scenario where it just continues to grow into the future and you can continue to ratchet up those growth rates. But we're not talking about 50% growth rates, 80% growth rates. Heck, look at NVIDIA's growth rates, over the past couple of years. Palantir isn't even that level. But yet he's talking about it has, the incredible growth rates and therefore it should command this, ridiculous multiple. It's like, right now, while it's hot and, the AI is kind of the hot trade, absolutely, that doesn't mean Wall Street isn't going to push it up there. But when we're talking about what is fair value and where is it ultimately going to trade at this stage, we're not seeing a growth rate that is anywhere near commanding some ridiculous multiple like we've never seen before. Sorry, I love Palantir. I love the growth rates. I think it's going to continue to accelerate into the future. I would agree there completely. But it doesn't make it this, again, we've just seen so many ridiculous growth rates quarter over quarter, year over year out of some incredible, Mag 7 style companies that right there was just kind of a silly statement. It's something that gets people excited. And I get he's excited as well. I'm excited as well. But I know that sort of hyperbole it doesn't play well, especially when I'm talking to you guys as retail investors who sometimes we get caught up in the hype. We get caught up in, oh, yeah, you're right. Maybe Wall Street would pay a 200 multiple long-term on this stock. Yeah, definitely. That's the same trap people fell into with Tesla. I've seen it over and over and over again with stocks where that becomes the narrative and then the reality comes into play. And it is, you're not going to see that, especially as it continues to grow in market cap. It gets even harder. Those big institutional buyers do not pay crazy multiples for stocks. They just don't. They don't care what the growth rate is. They're not paying those multiples. So therefore, you might get a huge run up. Like, we see that a lot with Tesla, right? A few other stocks. but it's going to come back down because you don't have the buyer stepping in at the institutional level to keep the stock high because they're like, I'm not paying that either. Sorry. That's just kind of how it works in the end. And you got to understand that as you understand the stock market.
Yeah, you talked about the spending on AI, and you have all the big guys: Palantir, Google, NVIDIA, Microsoft, Marvell, Broadcom, Palo Alto, CrowdStrike, ServiceNow are all in your realm. And John, thank you again so much for all the names that you brought to us, some of the smaller AI names, AI in small caps, a good variety today. Thank you both. John, Roy?
All right, so we'll go ahead and stop the video right there. As you can see, he was obviously really, really well into the AI trade, did an excellent job there. My guess is probably one of the few hedge fund managers that managed to play this all properly. I haven't gone and looked, so if you guys want to go back there, I'm sure you can pull up his fund there, maybe able to find some information on it in regards to performance. Shows you why during a time like this, it just doesn't make any sense as to why some funds didn't even, they had negative returns last year. I don't know how that's possible, but a lot of them did. So there you go. That's why I don't listen to hedge funds all that much. All right. So in regards to videos like this and this sort of excitement, this to me is two-sided. All right. There's two sides to this coin. One, I love seeing the fact that Wall Street is coming around to not Palantir being the trade, not Palantir being the hot name, not Palantir being the hype train, which it kind of was there for a little bit, but coming around to, hey, this isn't just a stock that I want to trade. It's a stock that I want to add long-term to my portfolio, to my fund. Obviously, they'll trade within that. They do all sorts of games. But nonetheless, that sort of narrative is very, very different than, hey, today it's the hot trade, and then next week it's, next month, 6 months from now, I'm going to be over here in this other position, and I'm going to be completely out of that, and I'm going to move on over here to this. That right there is what Palantir was in. And now we're starting to see Wall Street folks come around to, hey, something we may want to hold long-term, which means once we kind of get through, obviously we had a way, way, way overvalue explosion up to the top side there. Whenever we kind of settle down into a more normal trading range, whenever that time frame is, it means that you're going to have support there. It means it may be less volatile in the future. Now, that's a maybe, right? Wall Street has its own plans and they do whatever the heck they want. But it's good to see that. So that right there's the one side I think is extremely positive. The other side that I don't like is the fact that a lot of these guys, in order to create excitement for the funds, in order to get people to invest in their funds, because remember, that is how they make money, right? Assets under management. And when they take profits, assets under management, they take a percentage of that and a fee. And then obviously when they take profits, they take a percentage of that as well, or fee, however the heck they're structured. Each one's structured a little bit different. But nonetheless, how do you get people to invest in your fund? You say, hey, I own this stock. It's going to be massive in the future. And I'm going to continue to buy this stock at the right levels at the right times. So you need to invest with me. And that right there kind of becomes it's a sales pitch at that stage, particularly for their funds. So sometimes they are over rosy with estimates and some of the hyperbole that they use when they talk, which is fine. But us as retail investors, that can get us in trouble. And that for me is very, very dangerous. And that's why I say, don't listen to these guys. Don't, fine if you want to use it to get information, nuggets of information, whatever the case is. But this is why I ignore the noise. I do this simply for you guys. Otherwise, I would never watch anything like this because I can do evaluation on my own. I can see all the numbers on my own. I can see the projections on my own. I can see management's guidance on my own. I can understand the product on my own. I don't need to do any of that other sort of stuff except for set a valuation and move on with life and wait until the stock comes within that valuation in order for me to buy more shares. That's how I knew not to buy at 40, and instead I bought at 6, 7, 8, 9, 10, 15 or so. I think my highest buys were, mid 20s or so. That's just how I do it. And that has worked in the history of the stock market. There is no stock that just goes away and they always traded a 500 multiple, or they always, went to the moon and never came back down, or any of that other sort of stuff like that. You got to understand that thing. So this is good, but it is two-sided. And I wanted to make sure you guys were aware of that. And remember, if you want to learn all this, you're ready to take 5 courses for free, get your free coaching, work directly with me on learning how to do evaluation, learning how to understand when to buy Palantir, how to set price targets. And you want to see my complete watch list with price targets. You want to see all my buy and sell alerts in real time and so much more. Make sure you check out the pinned comment and see if a membership's right for you, and take advantage of that March Madness sale before it ends. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.